There are a few things it will cost you for you to be able to place your trade and be successful once forex trading is concerned. If you are not careful, you will be entering every time and only for you to lose your trade. Watch out on what I'm about to show you because it may be a surprise to you, but it's real. It's something that has been helping many, and those who don't know it are losing out in the forex world. Please watch this video and you will never regret to do. When market is in this form, we will say that the market is on a consolidation. And when market is in this direction, we'll say that the market is on a downtrend because it is selling. Or we can say that it is making a bullish movement. Why? A bearish movement because it is the red candle that is going downward. So what can you do for you to be able to see this so that you will avoid placing your trade when this is going on? Every successful trade demands that you will watch out for few things. You should watch out the support. You should watch out the support and the resistance zone. And you should know that here is the resistance zone and here is the support zone. So each time the market is making a move, the probability of the market crossing the previous rejections is the challenge that people are having. So once that is going on, most of the people who don't have the mind or the knowledge of what they're doing will be losing their trade because as it gets to this point, it will test the market again. Then why this thing happens, they may think that the market will continue while it will definitely go down like this. So in this video, I will be adding some things that can help you so that you will not make mistakes, so that you'll be able to fish out those things. You will be able to know if this thing you are seeing will continue like this or it will definitely go up like this. Then it will help you for you to be able to see if the market is going to be retracing or the market is going up. I mean, for you to be able to see a cross that will help you. So in this video, we shall be adding some indicators that are very, very nice and interesting. So one of the indicators we shall be adding, number one of them is stochastic oscillator. We are using the default stochastic oscillator. This is the default we are using. And we shall be adding the moving average. This time we are adding moving average 21. Then we are adding another moving average. This time we are adding 50. We are adding moving average 50. I will change the color to EW or any color of my choice. That is what I am using. Do you see this now? This is a nice setting that can help you. Look at the indicators. Look at it. Moving average 21 EMA, which is moving average 21 EMA. This is 21. This is 21. And this is 50. That is what I am using. Remember that the KD is lowering. Are you seeing it? So remember this. It's very, very important that you should take note of this. It's very, very important you should take note of it. All right. So what and how can you be able to make use of this? And the time frame I am using to do this, the practical time frame I am using to do this is 4 hours time frame. That is what I am using. And I am trading crash 1000. So look at this here. Look at this. But before you look into this, there is something you need to find out. What happened to this place and what happened to this place? And what is going on in the windows? And watch this place. And why is this one like this when there is nothing that made a move in this very place? Or am I entering with this? Or am I entering with this? Or am I going to be expecting this to be like this? Or should I place my trade like this since we have something like this? This and this is what we are going to be discussing in this video, and I beg you that you will never ever regret you watch this video. So please pay great attention. It's going to be a blessing, and it will open your eyes for you to be able to place your trade and be able to make profit successfully. Now let's forge ahead. All right, how do you detect a possible entry point and at least be able to make your profit using this very strategy? Number one, watch out your stochastic oscillator, which is what we have here. This line we'll have here is 80, and this one is 20. You know, in my normal video, I always make this thing to be 90, so that you will be able to detect when the line will definitely touch the last line, which is the 90 that should be somewhere here, and the 10 that should be somewhere here. But in this video, I want us to walk towards this video using this. Now, what are the things you should be looking at for? Number one, watch here. Watch what has just happened in this place. Watch it. Now, with this, you will believe with me that in this point, the market was moving uptrend from here, and at a point, it stepped down to this place and went up again and tried to move down to like this and later go up like this. So if I leave this line like this now, you will bear with me that there was a breakout here that brought this market to this place. So, and here again, the market went up and never touched this line again. But get to this very point. I seen it. So what are you going to be doing with this, and what should you be looking at for before you place your trade? What should you be looking at for before you be able to place your trade? Now, watch this crossing here. If you see a trade, if you see your candle moving up in this direction like this, then one thing you should watch for is, have this market crossed the 21 moving average and the 50 moving average? I hope you know that the red line is the 21 and the blue is the I hope you know that the red one is the 21 and the blue is the 50. So if the market will cross like this, which means it has gotten to a point where it will now have an agreement that after 50 days and 21 days of period hours, that the market cross together. So each time you see this, you will now know that the market is going to be making a serious move. If it happens like this, it's going to be making a move in a bullish movement, and if it happens like this, it's going to be making a move on a bearish move. So the crossing of the red to the blue will show you a sign that this thing is going to be going. If the red cross below like this from this angle and start going up like this, it's a sign that the market will be making a bullish movement, which is a buying opportunity. Then if the market will be if the red will cross below, this one will be crossing from this angle to this place, but this one now will be coming down to this place, and it's coming from up to the down like this. It's a sign that the market is going to be making a bearish movement. So where will you be placing your trade for selling? If you are selling, you will be placing your trade here at this very candle, because once the market crosses the line, it will test it first. Watch from here. Once it crossed here and crossed here, the next thing it will do is to test it, which is this one that went up and this one that tried to go up like this. And you allow it, you see different candles here. They all tested it, and finally the market broke down using this. So you should be placing your trade here. This is where you should be placing your trade for sell. This is where you should be placing your trade for sell. Then you should be using this place as your SL, your stop loss. But eventually the market didn't work that way and later move back. Then you will be marking your distance from this very angle. From here, you should be following this line, so that if the market finally broke out from this resistance zone, it will not go up against your market and your money will vanish. Then you'll be attempting to take your first TP from this very angle using this one from here. But eventually this affected the market that the later went on like this. Then aside that, you will now take your profit after 4 to 5 candles, which should be shown somewhere here, which should be somewhere here, which should be somewhere here, because you don't need to be staying in the market all throughout the day because of what later happened in this place. So how then will I be able to apply what we have on the main chart and what we have on the indicator window one, which is the stochastic oscillator? How do I apply the two, and for me to be able to make accurate this thing? Now watch out what you're about to see here. Watch out. You know, most times the stochastic oscillator can fake the market, but those who know what they are doing knows the truth that once the market starts dropping, that they have something to enjoy. Now, it's not everything you see that you will trade if you want to be accurate. It's not everything you see that you will trade. Now, let's see our day trend. Our day trend. This is where you'll be able, please take this secret. This is where you'll be able to see the good and accurate entry point in using this very strategy, if you must apply this stochastic oscillator and be successful. You know, in some of our videos, people don't know when we shift. So they will be watching us in 1 hour time frame. Then when we'll be moving to the day one, D1, and the other like week or month, they may not see it. They just jump into the video and they now drive back to their MT5 and start trading without following it. Now look at this. Look at what you see here. The blue and the red cross above the 80 line and step down. This is what you see. It will now have an agreement that it will, first of all, you will see something like this. First of all, you will see something like this. You see something that have once touched this very line. Once you see this, then you know that something is coming up. Then it will cross like this and come back. So once you see this line that have crossed like this, please take your trade, because you will confirm it using this very arrow. You will confirm it using watch here. You will confirm it, watch here, and watch here. So once you have seen this, every attempt the market will make. So if the market touches at this very place, then if it was fast enough using your day trend that the market touched at this place, please close your trade, because it means that the market may be making a bullish movement after taking a bearish journey. Please listen. Let's just take it that in a day that you are able to trade this candle, that you are successful enough to trade this candle in a day, then the next day you successfully trade this, you have made a good move. This is a very serious something. You know that this candle will only be complete in 24 hours. So you started trading this candle in 24 hours and closed it before the 24 hours is over. It's a very successful entry point, which most of the people, most of the traders cannot be able to detect what we are showing you now. So once this touches over here, then, and you are sure that it has crossed over like this from your day one, then something huge has opened up and you would definitely make a huge profit. Now let me show you, for you to know that it has everything you need and it will definitely help you. And one thing you must find out is for you not to enter to trade on a fake signal. That is one thing you should know. Anytime you see something like this, look at this place. Did it have any crossing like this? If the answer is no, avoid it. But remember that anything below this place is an opportunity. Anything below this place is an opportunity. So you must be very, very careful for you to watch what is going to be happening. Are you getting? So look at another another nice entry point here that you should be setting your eyes to see. Look at what we have here and look at what we have here. Any of this candle you traded is a nice move. And once you are able to do that, you will have nothing to regret. Let's move ahead. For you to do that, always look forward to see a breakout. Once you see a breakout, what do you see? Do you know that this is a day, a day, a day, and a day, and a day? Do you know that these are days? So the problem we'll have is that you waited for Monday. The Monday was going up and down. Tuesday, it was going up and down. Wednesday, it was going up and down. Then you force yourself to enter into the market only for you to lose out from what that's supposed to give you profit. But once you see something like this, a huge move like this, then you have something to enjoy. It's just as simple as that. And from here, you have something like this to enjoy as a bullish movement. So using this stochastic oscillator is very powerful. It's a very powerful strategy that can help you no matter your level in the forex world. You can do this. Watch out this. Watch out this. So why must you use this? You need to use this thing so that it will help you to fish out some fake signals. Watch it so that it can help you to fish out some fake signals. So that for you not to make mistakes, then apply the stochastic oscillator using your 21 and the 50 moving averages. Look at it. It has never failed whenever it happened like this. The only thing there is that you will see a kind of retracement, a kind of challenge, a kind of what I call it, all those things you are seeing here now, ranging. So it will just range. You have to be patient. But once after ranging, the crossing will help you to confirm the movement and you are good to go. That is how simple this thing can be. And you have to try this and you will definitely find out that you have just find yourself one powerful strategy that can help you. So this thing can be used to cast spike and it can also be used for you to do your scalping. Watch out. So that is how simple this strategy can be. Try it and you will not regret.